Hello, my test. Can anyone hear me? Can actually put one if you can hear me. Testing my mic. All right. Welcome everyone joining us tonight. Tonight we have our telco sector coming in. Before with Miss Kylie Chan. She's our telco analyst. She has a very strong experience in the sector. And she's actually very senior. Why do I say that? I know her, I think 10 years, almost for 10 years, where she specialized in oil and gas, and she have never failed to impress me.
Thanks, Adrian, for the kind compliments. I don't know if
Uh,
that's accurate.
it is. I mean, the views are good and the timing to look at things in a very where most people would not look into it. So yeah, it has helped a lot, and especially in those days, I was not so well versed with the sector that you're covering because I was majoring in construction, right? So yeah, I think I know you through one of our colleagues or my ex-colleague, Suzanne, something like that.
Yeah, Sita, definitely, yeah. And she was in Kenanga.
So
She
I
was
think
covering
that's
oil and gas
more,
too, yeah.
yeah, yeah, time flies. But there's one more minute before I think I pass the session to Kylie. Tonight we'll be joined by Kylie and also Isabelle, myself. All of us are licensed by SC. Both of me and Kylie is in advisory, while Isabelle is on the dealing license. So we are bound to actually highlight that, practicing on a guideline. So while we are heading towards 8, I shall try to continue the tradition of taking start the session with the disclaimer. I always urge people to print it out, uh, stick it in their toilet so that they can actually reminiscent with it and look at it. And these are the awards that have been winning. We are not just a Jago Kampung. We also eye for the ones that are overseas. And why are we still so hungry for more? You guys are that are joining us tonight and those that are eager to join but couldn't, uh, is our main driver. You see, I also have difficulty pronouncing certain things, right? But yeah, without further ado, as usual, before we jump into the main session of the telco outlook, give you all a brief look on the chart for Dow Jones. Cover four markets, and I'll be done with it. Dow Jones is now sitting at a very interesting spot where it's actually trying to break through 45757 level, but it's still hanging there. It's a bit of a cliffhanger feeling now if you get where am I coming from, right? So yeah, we will still be in the zone. I think it will be in the zone unless there's a very strong catalyst that's happening. Yeah, so let's see if it can break through. It's very interesting now, the market. All right, I'll jump next to Hang Seng. Hang Seng had did fantastically well. I think beginning of the week I highlight that I'm actually anticipating it to go up, but it could be on a range bound mode. It has poised to pose a surprise, positive one. We all love a positive surprise, never a negative one. Yeah. So where would it be heading now? It's actually looking to test the 26478 level, and I think it will hover around here for a while, with a bit of a weakness that could occur. So after a good rally here, this rally, I think if you have participated on the call warrants, that would be a very fat opportunity there. Next will be Straits Times Index, which is our neighbor, SGX. Why do I cover them? You can see this is crazy. And now I think they are trying to resume the rally. So I've been promoting Singapore stocks or SGX for the past 2 years, and they have done very well. So I think the next challenge of the resistance point is 4403 level for the index. For those that are keen to find out what kind of stocks to look at, do join our stock chat session every Monday. But next week we are having 2 days of holiday, so it'll be on Wednesday. Right? FBM KLCI, now jumping into the market, it would be it's a bit of a 50-50. It's either it's going to push through and form a very nice uptrend. If not, it's going to come down to form a head and shoulder or kind of a head and shoulder formation. So, but having said that, I think the downside risk for our market is pretty much priced in. So if any case has happened, the support will be at 1559 level. Right, jumping to our campaigns, right? We have Wake Up to Go for our dormant clients. If you have not been trading, start now. You might stand a chance to win a piece of gold coin, subject to availability, first come, first serve basis. All right. Next one, we just launched our DF stretch campaign for 2025 and that stretch until the 28th of February 2026. Basically, I think now the market is having a very good pace where the uncertainty on the geopolitics, the fear has dissipated. So in that context, I think we can participate a bit more, and this facility is actually very, very useful. And call your dealer, ask them how to actually find out about it, and sign on it. We have a good promotional rate of 0.2 and also an interest rate of 6.8 per annum. Having said that, on the next week, Thursday, 18th of September, we have another session, which is Technology Outlook. Do join us. The registration link is here, but you can actually, you would have received an email already by now. Yep. This is myself. I think I'm doing a weekly stock chat for almost 3 years soon. But now we are rebranding it, so I'm actually talking about it. And yeah, every Monday. But next coming week is a Wednesday because Monday is holiday, Tuesday is holiday, and I'll take the chance to say happy holidays to everyone first before I forget. KDI Safe is something I have always been promoting. If you have spare cash, try to max it out 4% per effective annual rate. Yes. Last one is always the quote session, which I love, and investment in knowledge pays the best interest, Benjamin Franklin. I think without further ado, I shall pass the floor to Kylie, where she will actually guide us through the telco sector on her knowledge base, where she will talk about the mobile segment on its trends, the fixed line market trends, and also the 5G dual network kind of update, and where would we potentially see the opportunity in the sector, and what is a preference? Would it be something on the 5G side, or would it be something on the fixed line side, given the boost in data center that we are actually seeing? All right, Kylie, the floor is yours.
Okay. All right. Thanks, Adrian, for the introduction. And hi, everyone. So today, I do this this is probably the third time. Every September will pop up and, to give you guys updates on the telco sector. And yeah, the telco sector can be a bit technical. And so some might view it as boring, might view it as a bit heavy. So Adrian, please feel free to interject, make it more lively. And if you have any burning questions, if it gets too dry, you can just interject. Okay, so I'll just share my slides, and it's over here. Okay. Right. The backdrop is the data center. We have a telco tower here. There's no direct link between telco and data centers, but as we go through the presentation, then maybe you can see some leverage that the telco sector has on data centers, which is currently the hot investment theme in the market. It's been hot for quite an extended period, but it continues to draw interest more than any other sector or theme. Okay, so yeah, I'm just waiting for the slides to transition. Okay, so next you will see I think Adrian mentioned briefly the topics that we would touch today. So yeah, so it's shown on the screen. First, we will zoom in on the mobile market. The current market trends that we are seeing, and also the same for the fixed market, and also the 5G updates on the 5G dual network, which has been lingering for at least we're entering probably into year 3 since our news flow started to begin on the 5G dual network. So since my last update in September of 2024, yeah, some developments have emerged. So I'll talk about that a bit more too. And growth opportunities next. So I think the hot buzzword now is AI, right? AI and data centers, basically. So telco sector is not left out from this buzzy word. I think most people associate telcos with just your mobile 5G plan. That is not true. There is some exposure to the enterprise sector via the AI solution offerings, which was bundled with 5G. So I just provide more color on that. And lastly, emerging opportunities on hyperscale data center connectivity, which touches on data centers as what I mentioned earlier. And you can see, and yeah, hopefully from there you can see how telcos are leveraged towards data centers, and where there are earnings opportunities, that telcos can capitalize upon. Okay, so next. Okay, I think there's a bit lag on the slides. All right. Okay, so yeah, we will go through one by one. The usual drill on ARPUs and net adds, subscriber net adds and ARPUs. So yeah, these are the quarterly trends. And yeah, it might be a bit boring to talk, whether it's up or down, how many, Q on Q up, how many thousand, ARPU up 1 ringgit, 2 ringgit, down 1 ringgit, 2 ringgit. Yeah, so but the mobile business is about 90% of revenue contribution, more than 90% of revenue contribution for the top two largest MNOs, or mobile network operators in Malaysia. So these trends, they do determine the earnings, to a large extent, the earnings of Maxis and CelcomDigi. So if we zoom in on the postpaid side, we can see that it's probably not very clear from the chart, but yeah, you can. But I guess if you zoom in from for the past 2 years, you can see that net adds have been inching up for a postpaid segment for both CDB and Maxis, and there's a reason for that. As indicated in the slides, these MNOs, they are strategically targeting the postpaid segment because this segment is where the money is, right? It's high margin, it's high ARPU implying higher margin. And postpaid segment users, they usually sign on for 2 years. So they're stickier, unlike the prepaid segment, which is very price sensitive, right? And, they tend to switch between the networks, depending on price discounts and offerings that are most attractive at the moment, right? So realizing this, the telcos, they have strategically focused on the postpaid segment, and so they want a higher proportion of their subscribers to be postpaid, understandably, as what we explained. So they like to migrate their prepaid customers to postpaid, and of course this applies to the high end and the high end prepaid customers who offer who pay more slightly more than the average prepaid user. So yeah, so how they encourage this migration is by introducing affordable entry-level monthly plans, right? I covered telcos back in the 3G era, and during the 3G era, postpaid packages, they started from RM 80 ringgit, ranging up to 150 ringgit, right? But now, fast forward, probably that's very slightly below 10 years later. I think about 5 years ago, the MNOs they introduced attractive postpaid very entry-level postpaid plans that start as low as 40 ringgit, and so the average ARPU for a prepaid customer is about 20 ringgit. But of course, there's a certain percentage that can afford higher, they spend more. So they spend, so if they can afford 40 ringgit a month, then for example, Max's Hotlink postpaid and CDB's lowest entry level plans, they start from 40 ringgit. Right. So that's the reason why you see an uptrend in the postpaid subscriber base, as reflected in the chart, right? So moving forward, this trend has been lingering, has been ongoing for years, right? For the past few years, 2 to 3 years, and so we expect this to sustain. And the reason is because, as what we mentioned earlier, stickiness, higher margin. So MNOs continue to desire a strong postpaid base, and so that will so they won't lean back on the strategy. They will continue to encourage migration, but probably I guess there is a certain limit threshold to to the migration, as in we are likely approaching the tail end of the migration process, as whoever prepaid customer that has migrated would have already done so. As we approach the tail end, we might see net adds that taper off unless the market expands. So as a result, I think the high growth in net adds that we've seen earlier, they might taper off, but we expect the postpaid net adds traction to, the net adds to continue, albeit at a smaller, at a slower pace than what we've seen in the past, right? So yeah, that's on postpaid subscriber trends. Okay. Next, we have prepaid subscribers. How are the trends looking for? How are the trends looking like for the prepaid segment? So it's a zero-sum game. So there's only a limited population in of population in Malaysia. If they're not on postpaid, they're on prepaid. The bulk of it is still on prepaid. Malaysia is the Malaysian market is primarily a prepaid market, a higher mix of prepaid users. So as we have said, it's a zero-sum game. So if we have pre to postpaid migration, that trend, then of course we would see prepaid subscriber net adds contracting. So this corresponds to the accelerating postpaid net adds, right? So so we expect this trend to continue, and and it will be mixed and volatile because, as we mentioned, we have reached the tail end of the migration. So, and the prepaid segment is a very competitive segment because we have a lot of MVNOs, mobile virtual network operators, right? So I think recently there's news flow of China Mobile entering the market as the MVNO targeting Chinese tourists, right? So so because the barriers of entry for prepaid are lower, you don't need excellent. I mean, relative to the postpaid market, prepaid users are less demanding. In terms of expectations of the customer service and the backend systems, right? So the barriers of entry for prepaid are lower. So understandably, there's more competition from MVNOs, including U Mobile, Unify Mobile. So this would contribute to the volatility in prepaid net adds. And and of course, the weakness will continue because we believe that pre to postpaid migration trends will persist. Okay, so so we talked about the previous trends and looking ahead what will happen. So pretty done on this slide. Okay, next ARPUs. So transition from subscribers to ARPUs, right? So we are looking at ARPU trends for the postpaid segment in the top chart. So you can see there's been a downtrend, and over from 2023, over the recent quarters, and this is reflective of the pre to postpaid migration trend, as we have explained earlier, right? So understandably, right? Because with the addition of lower end prepaid customers who are on the entry level plans who pay 40 ringgit per month, slightly more than that, they will drag down overall ARPUs for the prepaid segment, and so this has contributed to the downtrend. But in our view, but in second Q, we see that it has been largely resilient. So we think this is reflective of the fact that pre to postpaid migration has approached the tail end, as what we've mentioned. So looking ahead, we expect continued resilience because I think there's also the tendency of MNOs to execute their convergence strategy, right? So I think over the past 4 quarters, the MNOs, they have entered into this strategy where they believe to strengthen their postpaid base, they will offer attractive convergence plans. What are convergence plans? These are plans, triple or quad plays, right? So triple play, meaning a single user has 3 accounts with, like, for say example, Maxis, where they subscribe for your mobile plan, your home fiber plan, and probably content or fixed voice, right? Or so due to this convergence strategy, now the MNOs, they have turned competitive in the home fiber space. So to attract new customers, they now offer, in the at least over the past few quarters, they've been offering attractive discounts, below the line discounts, whether it be freebies or rebates for the first few months. So we believe that in order to attract new customers, the MNOs, they will offer discounts on home fiber instead of discounting on postpaid rates. So this would contribute to our expectations of continued resilience in the quarters ahead for postpaid ARPUs. Okay, next, quarterly prepaid ARPUs. So you can see that since 2023, prepaid ARPUs have dipped, especially for Maxis. And so, but in second Q, there was a marked recovery. So, it was particularly dramatic for Maxis because they finally reversed their long-term downtrend since the last quarter of 2022, right? So, we believe that this is reflective of the fact that the MNOs have they're probably now practicing more caution in pricing their prepaid packages, discounts at this stage is probably unsustainable, as it has reached pricing has reached very low levels. So moving forward, we believe that discounting activity would ease off, and this would lead to a resilient prepaid ARPUs. And also, everything boils back to the pre to post migration, which we believe has eased off, and so that would, so in the past, we have a lot of the high-end prepaid users migrating to postpaid, leaving residual prepaid users that contribute lower ARPUs. But moving forward, as the migration eases, we believe we have probably reached an inflection point. Okay, so most likely the price-sensitive subscribers have already covered it. Right. Okay. So, Adrian, are you okay? Are we doing good, or do you have any burning questions?
So far, doing good, but I have something I would like to find out. What's the difference between ARPU and ARPA?
All right. Yes. It's a new term that has emerged because because of this convergence strategy that we talked about. So, average revenue per user, it can be either a mobile, for the mobile segment, it can be either postpaid or prepaid, right? But ARPA refers to average revenue per account. These are for converged customers who subscribe for triple or quad play. As what we mentioned, home fiber plus mobile, multiple family lines are bundled together. Maybe they bundle with Netflix, they bundle with Unified TV, right? So
okay, I get you now.
Yeah.
It's more like a bundle account where inside there might consist multiple users or sub accounts.
Yes, over multiple products.
Okay.
Whether it's home fiber or prepaid or postpaid, supplementary lines. Yeah.
But
So it's a relatively new term.
Just curious, when we talk about ARPA, right? Would you see the stickiness for the term of ARPA to be higher than ARPU?
All right. So the telcos, because as we mentioned, it's a new term, so they don't disclose ARPA. Maybe a company would mention fleetingly what the ARPU is for the quarter. There's no trends that we can track, right? It doesn't reflect stickiness. It just reflects how profitable the account is. Of course, with higher ARPA, then your margins will be higher. It's actually more profitable, right? So there's no specific metric to that covers, that enables us to zoom in on how sticky that customer is. There might be an internal metric by the MNOs, but they don't review it. I hope that answers the question.
Okay.
We don't have the aging data on the aging of the customers.
I think also because it's new, we should give them a bit of a time to build up the trend to see what's in for this term, right? So yeah, thanks for enlightening us on this new way of classification that they have introduced, but are still building up the data.
Yeah, and this convergence strategy is relatively new as well. Triple play and quad plays have been around for the longest time, but there was less emphasis by the MNOs because they didn't see it as a retention tool back then. But now that competition has tightened, they can't compete on pricing anymore, and so they feel next they want to target convergence to retain as a retention tool. So they will give you attractive home fiber, on top of the convenience of having all the billions consolidated. Then yes.
Personally, I would love that. It's just I'm just lazy, so I wouldn't mind. I'll be a lot stickier in that context. So yeah, I think we can move on to the next topic where we are looking into the fixed side, if I'm not mistaken, right?
Yes. Yeah. So yeah, you mentioned yeah. So I think it probably pays to be a coverage customer. Oh, but the slide is not moving. But I'm showing the fixed market.
Let it sing for a while. I guess our network nowadays a bit
Yeah,
slow.
I'm on mobile. Okay.
Yeah.
Right. Next, we would actually talk about the fixed market, although the slide shows mobile. Yeah, so in terms of the fixed market, wait, just let me make sure that, that the slide
You know
seems
what?
static.
Probably I can actually help share the slide if you do not mind.
Yeah, I would feel so because I'm still stuck at the mobile side, but I've already transitioned to home fiber quite a long while ago.
No
But you
problem.
have my deck. Do you like to
Yep.
share yours instead? And I'll instruct you to move the slides as we go along.
Yep. Yep. There you go. We are on the fixed line market indicator where the Q-on-Q trends of home fiber subs. I'm actually on slide 6. Hold on ya. Siaran tergendala sikit. Oh. Now it's frozen. Okay, while we are waiting for Kylie, can anyone see the slide clearly where we are actually on the fixed line market indicators? If yes, would you be kind enough to actually put a 1 here? Cool. Thanks, Solly. Ah, Isabelle. See where you're getting there. Okay, cool. So we will try to make up for lost time later in a bit. Should I sing you guys the music? Press 3 for that, but I'm not good at singing. Cannot see the slide, Eric. Most of them can see. Eric couldn't. Hey, DG. CDB. I'm on CDB also, but I don't know what my building here uses in terms of my LAN. But yeah. Ching 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 ching. Maybe she's stuck. Let me try to help her share this. So everyone is on that, but wait for me for a bit. Slide is still there. You know what, guys? Probably what we can do here while waiting for Kylie to reconnect. Let's check out the chart for. Let's check out the chart for this guys of the. Okay, here you go. Maxis. We have Maxis chart being shared here. Let me put my face back out. These are the net adds of the mobile players of where Kylie has been highlighting earlier. And where I see in terms of chart formation is actually quite beautiful. You can see that you can actually see that the formation here at $3.60, right, is sitting right above the moving average line. And in that context, the next resistance level is one level pending to be broken if the momentum is strong enough. But with telco players, most of the time you need a bit of a foreign fund flow. For those that do not mind waiting, right? Collection closer to 340 is actually very ideal. But in the context of trading, I would prefer for a breakout above momentum that picks up, let's say tomorrow. But the context of things like trading in short-term wise is a bit short for tomorrow because our holidays are coming. So for reference for now, but you can actually put in your watch list. So the next question people are actually ask is $3.60. Is it really viable for retailers, or because the price movement is not strong, and we are looking in the consideration of all these commissions, the break-even level should be higher. So this is where warrants does some magic here. I would actually quickly go to the website of nagawarrants.com.my. You can actually click Naga Matrix here. Ta-da! Search from warrants, Maxis. Quickly. I want to study this because I'm curious if there's any opportunity, but this is not for, you need to be a bit slightly more sophisticated. And here we go. We have Maxis C55 here, you can see it. The few key indicator is where I think Isabelle have always been instilling in our brain, must, right? We must use the must strategy, where look at the matrix, where you look at the effective gearing sensitivity. For me, I like this to be more sensitive. Gearing, not so well versed with it, but I understand it from a layman more than anything for tick movement. This is what I prefer. But from the core warrant issuer later, we can actually check with Isabelle, right? Of course, time to expiry, not 2 days, don't touch that, right? So smaller number better, you can see, because it's very sensitive. You have a very good chance of making a better percentage gain if you ride on the right trend. So this is where knowledge is very important, and is also where we are constantly upgrading ourselves in upskilling our knowledge to how to actually tackle and survive in the market. It's inevitable. And I'm glad that you guys actually joined, because I myself is also learning along the way. So yep. Give me 5 minutes. I'll need to try to troubleshoot for Kylie, if you guys don't mind. I'm really sorry for the disturbance. Right? Okay, CDB, while we are at it. CDB is really on a range bound. So this is one chart to look at. I will actually quickly look into this zone. 332 to 366 is about a 10% downside if you actually look at it on a weekly chart basis. And this is, from the weekly chart perspective, is getting on also level. I will wait a bit more to see if there's any more downside, or I can actually plan 2 tranche of collection if it's on a range bound. Personally, I don't think there's crazy downside risk just yet. So we'll wait for Kylie to come back, and we can ask her if there's any bad expectation for CDB in that context. This is where we try to pair fundamental with technical. If we are investing, it helps a lot more to actually do dollar cost averaging downward. Trading is really different, but if you're going to do dollar cost averaging downward, you really need to have the guts to actually buy when it's actually trending down. And time will actually tell whether if you are going to perform over time. But most importantly, I will also look at the yield. All right. So next practice, do I see CDB here? CDB C66. Oh, it is there. But for core warrants, I would have always a preference that we want to look for out from momentum. Yeah. So give you guys a quiz. 4 ticks better or 5 ticks nicer? If 4 ticks is nicer, you can put a 4. 5 ticks are better, you can actually put 5. I might want to prepare some prizes for you tonight, but I'm actually surprised that I did not. But, well, while we're having this siaran to, Stephen Lai, I'd like to see if you're right later. Any more, Challenger? Any more? Give me a sec. You guys can still answer the question while I'm away, right? Yeah, 5 seconds. Ching, 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 ching. We are back. So there's magic happening soon.
Okay. Okay, hi everyone. Sorry, I probably bad connection. I actually don't know where I stopped.
Fixed line.
Fixed line. Okay. So yeah, sorry for that. Yeah, I hope you at least caught what I said. I was indeed talking about home fiber, but I'll just start over. Okay, so I'm not very clear on which screen I should look at. Okay, right. So now we are talking about the fixed line. So I'll just start over. So in second Q, you can see that in terms of net adds, it was very mixed outcome. Like for example, CDB surged, TM moderated, Timecom was resilient, and Maxis didn't have any net adds at all, right? So what you can see from the chart is that net adds are ongoing, as in telco, the fixed line players, they continue to add subscribers and expand their base. However, there's no clear trend as what you saw in the postpaid segment with a clear uptrend. What you see is, sometimes some quarters net adds are up, some quarters it's down. So why does this happen? The reason being that there is a heightened competition due to the fact that what we mentioned earlier, MNOs, they are all vying for convergence customers, right? And so, and at the same time, we have incumbent TM, TM being the market leader for the longest time. As you can see from the chart below, the chart on the bottom, that TM still maintains a very strong lead in the market in terms of market share, but however, has been slowly declining, not to a very worrying degree, but still, it has been slowly eroded their lead. And this is due to the fact that there has been competition for convergence customers by the MNOs. In fact, TM themselves, they have just entered into, probably like a year ago, they've re-entered into the mobile market with Unified Mobile offering fixed fiber on top of content. Like for example, their latest packages, they have Unified TV and we also have Netflix bundle. So yeah, TM is not going to rest on its laurels. It turned aggressive at end of last year in promoting its convergence bundles as well, and discounts for its home fiber plans, as TM intends to stave off competition from the MNOs. So looking ahead, since competition has just begun, and MNOs are still very keen to target converged customers. We expect a continued volatility, although there will be net adds as the market continues to expand. There would not be, due to competition, there would be volatility depending on how attractive the fixed line bundles are, discounts offered by a particular player. Okay. All right, I hope you guys are seeing my next slide, which is on home fiber ARPUs. So in second Q, it was mixed, where so between CDB and TM, it was weaker, as what we explained earlier, due to the introduction of entry-level plans that drag down ARPUs. But on the other hand, Timecom and Maxis improved, and Timecom, due to the fact that I just want to highlight the fact that Timecom managed to raise its ARPUs in a very heightened environment, and that was because they didn't they just focus on what they do best, which is premium postpaid, premium home fiber. So instead of introducing entry-level packages, they decided to continue to focus on the higher paying ARPU customers. So that's and they did now they have the strategy of targeted micro campaigns, meaning that they use data analytics to approach their clients. So instead of competing on price, they've decided to use data analytics to understand the customers, target those customers, who can afford and are willing to subscribe for higher value packages, and they have been successful in this initiative. So this explains their resilient and the uptick in ARPUs for second Q. Okay, so looking ahead, even though it's very competitive, even though competition has intensified, remains heightened, but we believe that over the longer term, over the medium term, the MNOs, they would likely be more prudent in pricing. And this is a view that was aired by one of the leading players. As in excessive discounting is detrimental to all. There's no reason to engage in an intense price war, as it would be detrimental to the margins for all involved, and so in particular for MNOs, in the past they were more willing to offer discounts on home fiber, as the major part of their earnings mainly comprised mobile users, mobile revenues. But now that over the past few years, they have scaled up their home fiber subscriber base, this segment has become more has a higher contribution to their earnings, so they would likely need to be more careful so that their earnings will remain intact. And so so based on these reasons, we believe that competition will unlikely worsen, would unlikely intensify too much to the extent that it becomes unsustainable and detrimental to all. Okay. All right. Okay, I'm finally done on talking about the mobile and fixed fiber trends. So now we move to regulatory updates. Okay, so last year we did talk about 5G dual network, and some developments have happened since then. So so in November, DNB revealed that they spent 5 billion for the first 5G network. So this is new information. 5 billion is, it's not a small number. But they've been transparent in revealing this amount. So in November 2024, there was a significant progress when MCMC, the Malaysian telco regulator, finally awarded second 5G network to UMobile, right? So all the networks bidded to develop NW2, the second 5G network, but the award ultimately fell onto UMobile's lap. So this is a significant development, but since UMobile is not listed and we don't cover it, so the benefits would actually accrue to UMobile. So next in February, there was some news flow that DNB, which is the operator of the first 5G network, they have embarked on a corporate restructuring. So this involves consultants, external consultants, and so they came in to revise DNB's business plans, funding strategy, and their operations. So they did mention there would be radical cost optimization to strengthen the company's financials. Right. So more recently this month, the Digital Ministry reaffirmed what we knew earlier, but there was more transparency on the numbers. So the ministry informed stakeholders, the public, that when MOF finally divests completely from DNB, all the liabilities will be assumed by the remaining shareholders. And these shareholders, so after UMobile left as a shareholder of DNB, the remaining shareholders, to recap, was Maxis, CDB, YTL Power, right? So so what happens after after the 5G dual network policy is finalized? There might be some shareholders from this existing pool that exit and some that stay. We don't know. There may be one or two that stay, one or two that leave. But all the liabilities will be assumed by those that remain in DNB. So 450 million ringgit of shareholders' loan from MOF. It's been reduced to 200 million recently, following a capital, following there was this recent exercise to inject shareholders' funds into DNB. And secondly, there's a receivables purchase agreement, 800 million ringgit, government guaranteed loan, 1.5 million ringgit. So all these are on top of what MOF injected earlier into DNB, about 500 million. So you can add all this up, and so all these liabilities will be assumed by whoever remains in NW1, the first 5G network. So DNB would be, so to recap, DNB would be known as a new entity. So all these shareholders will take care of these liabilities. So, one major development was DNB's restructuring, which happened in May of this year. So, as what we mentioned earlier, after U Mobile was awarded the second 5G network, so it could finally exit DNB. So these are the details. So following U Mobile's exit, the remaining MNOs, as what we mentioned, Maxis, CDB, YTL Power, they collectively own 58%, and MOF, the Ministry of Finance, holds the remaining 42% stake, including one golden share to exercise control. Okay. Right. So this is what the shareholding structure looks like currently, following the exit of U Mobile. You know, that has been mandated to build the second 5G network. And so I think last month, what I mentioned earlier about additional shareholders' advances, DNB received 117 million ringgit in cash advances from each of these players, Maxis, CDB, YTL Power. And so MOF didn't have to inject cash, but they still maintained their stake. And that was because MOF had an existing loan, as what we mentioned earlier, 450 million ringgit. So while the other MNO shareholders injected cash advances, 117 million ringgit each, what MOF instead reduced their outstanding loan to DNB from 450 million to 200 million, reflecting, you know, its additional shareholder advances. Okay, so next. Okay, yeah. So basically, this table summarizes, you know, what I explained earlier, and yeah, you can zoom in. So now, the MNOs, they have in total, they have injected about 350 million ringgit each into DNB. So if any of these MNOs, they exit DNB after announcement of the 5G dual network policy, this amount could be used to offset 5G access payments for DNB. So to recap, these players, they have signed offtake agreements with DNB. So I think it's about 288 million ringgit per annum for 5G capacity, wholesale capacity. So these shareholder advances would go toward payments of these fees if the MNO exits DNB. Okay. Right. So so we all know U Mobile is the developer of NW2, second 5G network, and so rollout has finally commenced. So they reviewed their plans to deploy about 7,000 sites in total. So this is about the number of sites that DNB currently operates for 5G, right? Yeah, so NW1 had about 7,500, right? So so now U Mobile has entered into phase one. It would stretch over the next 12 months, where they plan to roll out 4,000 to 4,500 sites. So they announced that their technology partners, the 5G equipment vendors, would be Huawei in Peninsula Malaysia, and ZTE in Sabah and Sarawak. So in terms of financing, CIMB will provide up to 4 billion ringgit. And yeah, so the 5G technology partners, we understand that they would also finance the 5G equipment. Probably payments for these 5G equipment would be would be on a deferred basis, as in they can progressively, or an installment basis, whatever you might call it, where they would just progressively pay, U-Mobile would progressively pay Huawei and ZTE over the longer term, when cash flows, when they have secured the cash flows. So U-Mobile reviewed their target for NW2, 80% COPA meaning population coverage. So yeah, it's not geographical coverage, it's population coverage. So probably it means that the bulk of the sites would be at high traffic areas, like urban areas and industrial zones, so forth. Okay, so they have a plan to raise it to 90% within the next 12 months. So currently NW1's COPA is about 82%. Of course, as long as the 5G dual network policy is not crystallized, we heard that DNB has stopped expanding their sites in a significant way pending the outcome. Right, so the network rollout for U-Mobile, for the meantime, in the near term, they plan to focus on in-building coverage, IBC, in 400 buildings over the next 2 to 3 years. And so the reason is because that for 5G, the nature of the 5G spectrum, it's a shortwave length frequency. So you need to so your in-building coverage might be weaker unless you install antennas within each building to boost capacity, right? So realizing this, this would be U-Mobile's immediate plans for their rollout. Okay, yeah, and I think they were I think for NW1, there were some grouses that IBC coverage wasn't very strong. So yeah, on that note, that this would be U-Mobile has decided to focus on in-building coverage, and especially in high density buildings such as hospitals and shopping malls, so forth. Okay, so NW2. We are looking at the table of beneficiaries. So we announced. As we know, it's a very major project, NW2, right? So as what we reviewed in the slides earlier, NW1's cost was about 5 billion in terms of capex and opex spending over the past few years. So who gets to benefit from the rollout of NW2? So so now we are looking at potential beneficiaries. So tower infrastructure providers, these are the names: OCK, Axiata, Reach 10. So right, so as we mentioned, NW2 would involve deployment of about 4,000 to 5,000 sites. So these sites are actually towers. So it's either towers that you see, it could be IBC towers, or it could be those standalone towers that you see, those gigantic structures that you see next to the highway, or poles, 5G poles next to roads. So these are all called sites, and so Axiata, OCK, and Reach 10, in particular, Axiata is the largest tower owner. So they would benefit from leasing space on their towers for U-Mobile to place their 5G equipment. So next we have fiber backhaul providers, TM and Timecom. So TM and Timecom, they own fiber backhaul, meaning fiber network, underground fibers. And these underground fibers, they connect the 5G sites to each other. So one 5G tower to another 5G tower, it's connected via fiber optics cables. So yeah, right. So this ensures this ensures seamless, high latency, low latency and high speeds. Fiber is still the best compared to radio equipment, 5G radio equipment or microwave. So if you recall, recently TM was awarded a 2.4 billion contract over 10 years for the provision of fiber backhaul and also edge computing and for U-Mobile. So TM only secured 70% of U-Mobile sites. So the 30% might potentially go to other players, including Timecom. Okay, so yeah, and just to recap, Timecom did sign an MOU with U-Mobile. So there might be a potential collaboration for provision of fiber backhaul for U-Mobile. Right, so lastly, telco engineering firms, OCK Redstone, Theta Edge, Hextra Capital. These are telco contractors, network contractors. So they design, they can design the fiber optics network cables. So so let's say if OCK wants to install a 5G site, then they would ask OCK to install the 5G equipment and install the fiber connecting, install the fiber connectivity between sites and so forth. So all these contractors, they can vie for these for implementation for construction of these networks from U-Mobile. Okay, I think we're a bit running a bit late on time. Yeah, so just quickly, potential growth areas. So as we talked about earlier, AI is the current buzzword, and so how telcos are involved in AI is that they can offer AI solutions to enterprises, and these are bundled with 5G solutions, right? So AI solutions, they can include these services, right, such as AI-powered inventory management system. So these robots, they require 5G connectivity, right? So the systems and the software and the sensors on these robots and machineries, they are connected. They need to talk to other robots, other equipments, command centers. So it's all wireless via 5G or fiber or fiber Wi-Fi connectivity, right? Smart city poles and robots for use in hospitals for robotic surgeries. And in this case, it's ultrascan equipment. These are robodocs. So of course, the MNOs who operate 5G networks, they collaborate with technology vendors, as understandably they don't manufacture robots and all these all these equipment. So they partner with manufacturers that produce robots, drones, and robotic arms and software solution providers. So what the MNOs do is they bundle these solutions with their 5G services, so that single solution functions seamlessly for the enterprise client, right? So these enterprises could be corporates, it could be government agencies, they could be they could be educational institutions, whoever can afford and who is seeking 5G, who is seeking AI technology to incorporate into their operations. So in terms of earnings impact 5G and AI enables 5G monetization. So as we all know, 5G for the consumer, when you subscribe to 5G, you don't pay extra. You just, your mobile plan, the pricing remains the same. So there's actually, and of course, telco plans in Malaysia, they are regulated by the government, so you can't increase prices arbitrarily without regulatory approval. So how can, with all these 5G investments into new equipment, how does CDB or Maxis extract more value from customers? It's definitely not from the consumer segment. So now the next segment that they can target will be enterprises, right? So 5G so enterprise contracts for 5G solutions they should be quite lucrative compared to the average mobile consumer plan, and they're also longer tenures because a typical consumer plan would only stretch up to 2 years, and an enterprise plan, because of all the equipment that you've installed, then you need to be locked in for a longer time period so that you can amortize the costs, and so there are longer tenures and the margins are also higher. Right. So we believe that this penetration into the enterprise segment will be a new growth driver for MNOs to offset slowing consumer service revenues. So the consumer service revenues have been it grows steadily, but it's just very subdued growth. In the past 2 years, consumer service revenues only grew about 1.5% per annum, as it's a very matured market, and it's a very stable and matured market, right? So currently, enterprise customers, they only account for less than 9% for Maxis and 2% of CDB's total service revenue. So this implies a lot of room for growth. Okay, lastly, on hyperscale data centers. So I think there's been a lot of news flow of hyperscalers setting up data centers in Malaysia, and these are mostly cloud zones, whether it's Google Cloud, Microsoft Azure, and Amazon Web Services, Oracle. So so when they mention it's cloud zones, it's basically a cluster of hyperscale data centers, and these hyperscale data centers are high capacity. So these they up to hyperscale data center park can stretch up to 100 megawatt in capacity, right? So these data centers, they need to be connected to the global data centers owned by these hyperscalers, right? So these hyperscalers, they own global subsea cables, as in subsea cables meaning fiber optics cables under the seabed. So these subsea cables, they provide fiber connectivity for the hyperscalers network of data centers, right? But these hyperscalers, they only own and operate undersea cables. They don't have middle and last mile connectivity. So what does middle and last mile connectivity means? It's so instead of fiber under the seabed, which applies to subsea cables, it's actually fiber underground. So for example, TM and Timecom, they have a network of underground fiber cables onshore. So and these are controlled by local players and due to regulatory reasons. So to connect a hyperscaler's subsea cable from one to from one end to another end let's say Google has a data center has a data center in Almina, and it wants, it needs to be connected to their data center in Singapore. So instead of traveling through global subsea cable, it can do that, but alternatively, it can also go through onshore underground fiber optic cables, right? These are infrastructure owned by local players such as TM and Timecom, and so how they package these fiber connectivity products for hyperscalers is called managed wavelength. Very technical terms: managed wavelength, HSBE, which means high speed bandwidth allocation; IRU, which means I can't recall, but there's a table where we can, IRU meaning indefeasible rights of use. So all these services, they are like you see on this table: IRU, HSPA, managed wavelength, IP transit, co-location at submarine cable, SCLS meaning submarine cable landing stations, are fiber last mile and middle mile connectivity services provided by the fixed players to these hyperscalers, right? So that's on the larger hyperscale players. So on the global hyperscalers who are called tier 1, which are the names that we mentioned: Microsoft, AWS, and AWS and Google Cloud. But there's also the smaller scale ones, such as the Chinese players, Alibaba. Oracle is also relatively small to names like Meta and Google and so forth. So these players, they likely don't own global subsea cables. So in this case, they can rely on TM or Timecom, who owns stakes in global subsea cables under consortium, right? So these are the various type of services that telcos, fixed line players can offer to hyperscalers, right? So hyperscale data centers, they are not just owned by the hyperscalers. There's also co-location data centers operated by DC operators, names such as Equinix, and even YTL Power owns a data center park. So enterprises such as banks, government agencies, and MNCs, they are co-location tenants at DCs. At these DCs, so they rent racks, server racks at these data centers. So they require fiber connectivity, high-speed private connections to link their co-location DC sites to nationwide branches and cloud environments. So again, you can see from this table that there's an array of services offered by these enterprise players, such as Metro Private Line, Metro Ethernet, IPVPN, so forth, right? So these are just various names to, meaning that that define fiber connectivity. That means fiber connectivity, fiber cables connecting enterprise DC co-location sites to wherever an enterprise tenant needs you to connect. Like say, for example, from their DC in Almina to their branch to public, like say Public Bank's branch in Petaling Jaya, right? So yes, and all right, so this should be the last slide. Yep. So in terms of DC network deployments, network contractors, the names that we mentioned earlier, they can build these fiber networks, connecting DC co-location sites to DC co-location sites or data centers to other data centers and so forth. So they do the network design, ducting and trenching, fiber installation, and so forth. Right. So in terms of our earnings impact, we expect our earnings contributions from hyperscaler connectivity contracts to materialize from 2026, and this coincides with the ramp up of our cloud regions, for example, AWS, Microsoft, Google. And as we explained in this table, these contracts are very long-term, as it involves a lot of CAPEX. So you need to recover the CAPEX over a longer period. So these provides long-term recurring revenues to the telcos. And whereas for enterprise contract tenures, there's less CAPEX involved, right? So as it's shared infrastructure, the fiber is shared between multiple users. It's not exclusive fiber, not that fiber. So it still runs a decent tenure of about 3 to 5 years. So MNOs, they also, benefit from higher earnings visibility because currently, the bulk of their revenue is from consumer mobile postpaid plans that stretch from 1 to 2 years only. So yes, I'm finally done. And yes, I'm finally done. It was a very long-winded discussion on the telco sector. I hope everyone is still engaged and
not long-winded at all. Can you guys hear me? Hi. My sound is a bit soft, but I think Kylie did a very meticulous, great job in sharing what is happening, of what we could have thought of in the telco sector, where I normally think it's just mobile and prepaid. And now that she have shown us an opportunity where we can see from the telco contractors and also where the enterprise business could lead to, and also the data center. So just to get the ball rolling, Kylie, there's a question in the queue in the chat where do you think the possibility of your mobile IPO is happening anytime soon, like probably next year?
Right, I think next year is likely the case. So the latest news we heard from from various sources is has been delayed yet again. So the new mobile IPO has been lingering. News flow on it has been lingering since the past 10 years. But of course, now I think it would be accelerated now that they have secured NW2, the new network. So it makes the company very much valuable that they own very rare and precious spectrum. So it was slated for year end, but as we're approaching year end, probably the rumors of further delay is likely the case. In any case, we'll just continue to wait.
Okay. Just a question from myself, Kylie. Where do I see the telco contractors could potentially benefit because they can also lay fiber optics, right? Between the players, which one would you prefer? Like names like OCK, Reach 10. I think I saw an initiation this year on Reach 10. Would you mind share with us slightly a bit on this company?
Yeah, right. So I think OCK would be probably the biggest beneficiary of NW2 contracts. The reason being that their revenue base is not as large as E.co, which is operated by Axiata. So any contract that they secure would result in a large swing in their order book and in their earnings, right? But of course, there's also talk in the market that these NW2 contracts are very low margin, or they take an extended time to complete. So it remains to be seen. So we still need to monitor very closely whether it would result in a very positive boost to OCK's earnings. But so to answer your question, it would be OCK for reasons I mentioned. Although E.co would likely secure a lot of tower tenancy, co-location tenancy agreements or contracts, it would probably be less visible given Axiata's huge earnings base and also yeah, and also edotco's huge earnings base, right? I think the same goes for the other players that we mentioned, Theta Edge and Redtone. But I've not heard of Redtone securing any IBC contracts, whereas OCK seems to be very active in discussions with the technology vendors, ZTE and Huawei. And whereas edotco has been appointed as also as the IBC partner alongside OCK. So to answer your question, it would be OCK. And on the second part of your question on Reach 10, so okay, I wrote an IPO note on Reach 10, and they are also they have been talking to U-Mobile about the possibility of building 5G sites for U-Mobile in Sarawak. But again, according to the company, it's still early days. And their largest competitor would be Sakova, which is the Sarawak state-owned tower company, with which is number one in Sarawak in terms of telco portfolio size by a far advantage. So so I think if I want to play on NW2 contract beneficiaries, it would still very much be OCK. Yeah.
All right. That's a very detailed explanation on sharing what's happening down on the scene. And last check, I think there's no more questions from the ground in the chat box. Let me take another quick look. So yeah, there's no more questions so far, and we are kind of running a bit delayed. And I think I can see Isabelle is already put in line there. Shall we, Kylie? I think, shall we give Kylie a big thank you before we welcome Isabelle?
All right, thank you, everyone. Thanks for I hope I
Thank
hope
you, Kylie.
I hope
Thank
the
you,
session was
Kylie.
beneficial. All right, thank you, Isabelle.
Yeah, and thank you for being so professional with your technical difficulties. So you didn't answer my question just now. Which mobile provider are you using so we know never to use that? Too shy to say. You dare not say,
Well,
right? Because you're close to the
company, so I wouldn't want to reveal that.
you're close to the IR, I'm sure. But yeah, that's why we bring people like Kylie in to those of you joining us today, because they get the first-hand information from the company, and nobody can out-analyze a company compared to an analyst because of the insights that they get when they dig, probe, and interrogate the company itself. No amount of articles that we read can actually compare to them asking face to face, tell me about your company. Yeah, thank you so much for that, Kylie.
All right, thanks, Isabelle, for the kind words too. Thank you. Thanks, everyone. Okay, I'll just pass the time to Isabelle then.
All right, thank you. So a quick session, I'm going to cover a bit about Hang Seng because we've just launched its brand new products, Hang Seng Tech and Hang Seng CI. For those of you who are not interested in Hang Seng at all, take it as a 5-minute education, and I promise I'll make it worth your time. So a quick disclaimer, you saw above there, speaker, that is me. On a good day, 2025, 2024, we've won a lot of awards. These are all awards at Kenanga. The ones highlighted in yellow are the ones that we won very recently, and the ones all in red are all for Naga warrants. Now, I always say that even though you can be as motivated as you are, as driven, you wake up every day with a smile on your face and you're extremely motivated, it does not compensate or substitute for something that actually works. In my experience as a warrants issuer for the past 8-9 years, I've got a lot of little tricks and tips that I believe can help your trading. And you don't have to follow it. It is not compulsory, but I feel that it can benefit you because I look at it from a perspective if I was a trader as I was previously, as in a full-time client trader. So, like I mentioned earlier, these are the two new indexes that we've issued. It's our first ever Hang Seng CI and Hang Seng Tech. But I asked myself, Isabelle, why would I bother learning so much, right? There's already the Hang Seng, which is the most popular index being traded in Malaysia. Why must I learn about Hang Seng CI and Hang Seng Tech? It's just a massive waste of my time. I'm already exposed to Hong Kong via Hang Seng, but take this as a learning. So our previous session, these are all the warrants that there is available on Hang Seng Tech. So there were two calls, and let me just zoom in for you a tiny bit. So for our warrants over here, whenever it is black, because I like Blackpink, if you know them, black is a call, pink is a put, tech call put, and CI, Hang Seng CI, there's a call and put as well. That's for normal Hang Seng and Hang Seng CI. So mainly, Hang Seng itself, right? The Hang Seng Index Company, which we had a speaker previously, they issue so many different indices. They've got their flagship, they've got their market indexes, which is their, I'll zoom in for you guys. Their composite, look at all these indexes, it's crazy, right? Hang Seng Stock Connect Index, they've got their sectoral indices, which is biotech, consumption, automobile, AI, China new economy, A robotics. They've got a sustainability index. So all of them really mean that they are like a family. So let's say your family, you've got one wife, two kids, another person has got one wife, three kids, another person has got three wives, one kid, you know, they're all different families, different compositions. Factor index, which is a dividend yield index, a quality, a momentum, size, value index, and they've got strategy indices and they've got global indices. But we're only going to focus on these blue ones over here, the flagship indices, all right? Because that's what is the most easiest to trade, if you ask me. In our previous session, I've only got 5 minutes with you, so bear with me. I'm going to do my best to finish in the next 3 minutes. Ha, challenge accepted. Hang Seng has different components. I've already covered this in a previous session. You can look at the YouTube replay. But the main difference for this is that for HSI, it has got HSBC, AIA, Hong Kong Exchange. And the difference is there is a W, which means, dear Isabelle, what does W mean? W means weighted voting rights. Now, why is it so complicated to have weighted voting rights? Because over there, founders get to keep control, attracts investors without giving up decision-making powers, and is popular among tech and innovative firms. Now that's Hang Seng Index, the broad-based one. If I go into Hang Seng CI, it has these little companies with a few differences, but you can see a lot of them, they actually have Bs, and these are pre-revenue biotech companies. And finally, for Hang Seng Tech, it has S and SWs, which is secondary listing and weighted voting rights. These all I've covered in the previous session. Now, today, I'm going to bring you something brand new. My favorite question, if those of you who have joined me over the last few years, is I have a great degree of indifference, which is I like asking, so what? What for? Who cares about all the components, right? How does it affect me, my own trading? Well, I've divided it into a few different categories. So I'm going to zoom in, don't worry. But there we go. I see my screen lagging a bit too, but not as bad as Kylie's just now. All right. So underlying index. You've got, I'm going to cover these 5 headings. Underlying index, volatility and trading styles, liquidity in Malaysia, correlation and diversification, and what? This is the so what over there. Okay. So for underlying index, a quick summary is that there's the HSI. It's a broad Hong Kong benchmark. And it is less volatile compared to sector-specific indices like the others that we saw earlier. And you can use HSI if you want to get exposure to the Hong Kong markets or macro plays. Okay, no problem. HSI, I got it. HS Tech, however, it has much higher volatility due to tech sector sensitivity. So let's say things like regulation, earnings, or US-China tensions. So warrants on HS Tech, they are very popular for short-term directional bets. Well, I wouldn't say bets, I would say trading, because small moves in index can create larger percentage change in warrant prices. And finally, for Hang Seng CEI, this one, it is very different because it looks at state-owned and private companies. So let's say it moves when there are policy-driven macroeconomic announcements. So let's say if uh, are you are privy to Beijing policy shifts, then you can consider something like HSCI, and that will be more sensitive towards all of these movements. The next part is volatility and style. So let's say you are a technical analysis based trader like I am, then I kind of like Hang Seng Index itself because it is a very, very well behaved technical index. It is easy to trade if you are TA strong. For those of you joining us right now, if you are into fundamentals, can you press FA? If you're into TA, can you press TA? Just so I know. I just like to know. I'm a curious human. And for Hang Seng Tech, it has high volatility, so it has well suited for intraday traders who thrive on momentum. Momentum means short-term trading. So momentum means short-term and swing trading means medium-term. But in the context of Hang Seng, it really is. Momentum will be somebody who is an intraday, 1-2 day trader. A swing trader will be somebody who is almost 3 to 5 days. It is a different definition when it comes to Hong Kong. And HSCI, moderate volatility, and it's based on policy news. But remember, there is a big gap risk because policy news can be announced after markets, right? So when you wake up on the next Monday or next Tuesday, there are these gap ups. But if you're banking on these gap ups, then Hang Seng CI is your baby. Thirdly, liquidity in Malaysia. Honestly, because you have Kenanga as a market maker, the Naga warrants team, the Hang Seng Index warrants, it tends to have the highest liquidity and turnover, basically because everybody is very familiar with it. The Hang Seng Tech is gaining traction, especially among traders chasing quick momentum moves, and Hang Seng CI, also the one that we issued for the first time, we provide liquidity for entry and exit. So in summary, never reached summary yet. One more little bit, yeah. Correlation and diversification. Now, correlation, HSI, it is a mix of the Hong Kong market sentiment, right? If you think it's bullish, you buy a call. If you think it's bearish, you get a put. But HS Tech, it is more correlated towards US tech as well. So even if you have news like NASDAQ, NASDAQ movements, NVIDIA, Fed rate outlooks, HS Tech has a tighter correlation to overseas markets. And for Hang Seng CI, it's more correlated towards China macro policies. For example, the PBOC, the China's official bank, right? The PBOC. For SOE, if you're not sure, it stands for state-owned enterprises. So whenever they have these kind of reforms, then Hang Seng CI is your baby. Finally, trader takeaways. So just to put it very, very simply, if you're interested in steady exposure and liquidity, you go for Hang Seng Index itself. If you want fast, volatile movements, but I advise you to manage the risk tightly, Hang Seng Tech warrants. And finally, if you're looking for a warrant that gives you exposure to China policy directions, stimulus, rate cuts, reforms, Hang Seng CEI. And that wraps it up. Those are my slides. Thank you very much for your time.
3 wife and 1 kids. That's one hell of a family, man.
All right, so I'll clean the slide up. So if any of you want to screenshot it, as I know you guys always ask me to, you can screenshot it in 3, 2, 1. Yeah, feel free. Yeah, so that wraps it up for me. And if any of you would like to know a bit more information about what we covered last session, oh, this is my This is an Isabelle quote. A trader can diversify strategies across the three indices depending on broad sentiment, that's HSI, tech momentum, that's HS Tech, China Sea policy plays, HSCEI. And of course, the same risks apply for structured warrants. And if you want to know a bit more, we have our Kenanga channel where I've covered all of this content before.
Yep. Thanks, Isabelle, for sharing with us, especially on the correlation part, because even although I look at it every day, I also get confused, but that actually helps a lot clarifying it. See, guys, this is where we are all learning from each other, and I'm glad that everyone is here tonight.
I learned
But
from you too, Adrian.
yeah, so we are constantly learning, and if we always love feedback, do pop us your feedback, and yeah, we are always looking to self-reflection. But yes, I think without further ado, it's getting late, and I couldn't thank you guys more for sticking up with us. Yes, Contact, cheeky smile.
Richard.
So I'll say good night, everyone. Nick, again, a reminder, gentle reminder, next Thursday, we will have the technology sector webinar. Do mark your date. It's on the 18th. All right. And Stephen, that answer is correct. 4. Yeah, not 5. 4 is better than 5. A bit pantang lah, Gina, but yeah. Okay. Good night, guys. Thanks,
Thank you,
Isabelle.
Quantic. Bye, Chiu. Thank you so much.
Bye, guys.